Everyone, welcome to the casino. Obviously, we've had the meme stock craze, the short squeezes, the AMCs, the GMEs, and yes, I'm still wishing I had those May monthly 10 strike calls for $1 that hit, 65 plus bucks this morning. Let alone the May 15 calls for 35 cents that hit about 50 bucks this morning. So, not much, just a little bit of a game, but let's figure out what names could squeeze next. So, pretty much the one thing all these stocks have in common is they're all near 52-week lows except for the past 2 trading days. So, to give you a list of where you're seeing the rotation, pull out a good old handy-dandy watch list, and this will give you a list of names: SunPower, AMC, GameStop. We'll run through a few here just to show everyone here. Plug Power. Basically, if the company is going bankrupt, then it is up 100% in the next 2 days, or in the past 2 days, I should say. So, Plug Power, ChargePoint, up 100 off the low. Lucid. I mean, if Fisker was still around, they missed out. They already went bankrupt. They would have been on the list as well. But like Lucid Motors, a few other ones there. Rivian from $8 to $12. Rocketeer, SpaceX, remember, or Virgin Galactic, I call it Space, the ticker symbol, from 7 cents to, $1.40. So again, pretty much every name out there with the high short interest. And then on the flip side, the stocks that are safe, your names like Walmart, straight down. Your names like Pepsi, straight down. Coca-Cola, straight down. You might be saying, well, yeah, it's only down 1%. That's a huge move for a name like Coca-Cola or Pepsi or Dr. Pepper. So your Kraft Heinz, right? Your T-Mobile. These are big moves to the downside because they don't move as much. To give you an example, let's look at a meme stock today, and let's use BYOM, Bed Bath & Beyond. It's up 2% today. The call options, well, they're up because implied volatility. Oh my God, that's insane. That's just how much vol's in them. Let's try to find a less kind of crazy stock. How about let's do Carvana. Let's see about this one. It's up 2% today. The calls are up. The June calls are up about 5-10%, so not much, right? But if you look at a stock, let's say like Coca-Cola, a 1% move lower, look how much they're up. 54%, 63%, 35%. The weekly options, the May monthlies, 160%, 190%. To give you an example, so there's 2 ways to play. You can look, if this continues, for puts in the safe stocks, so companies that are low beta, usually high dividend, staples. To give you an example, the consumer staples, which would be like XLP, names like Procter and Gamble. Basically, during a recession or hard economic times, people still need their toilet paper, mac and cheese. What we are living in is euphoria right now. It's, a fairy tale land where you're going to want to look at the worst companies out there. To give you an example, Tupperware, we saw $1 million put buyer in today. And you can see it's already fading lower there. Wow. Perfect timing. Tupperware, we saw $1 million in the Jan 4.5 puts. Look at this stock. It was, $1, now it's $2. And, a couple weeks there. This is a company that said, hey, we're going bankrupt. The problem is, holding through these squeezes is hard. So, yeah, you could look for the next name that might squeeze up, but also these names can go down just as fast as they go up. The problem is, buying puts, you're going to want to look at in the money puts, and even if the stock goes down, you're going to need it to go down so much. And what I mean by that is, like GameStop, for example, it's up 65%, so almost $20. But the implied move between now and the end of the week, it actually was $25. Now it's only $20. So you can see volatility's already came out of the options. You're looking at basically a 50% move in the stock, higher or lower. So a 50% move would be 75. Good Lord, we gotta up these strike prices. A 50% would be 75, and the 70 calls are 830. The 80 calls are 690. So you can see the market makers have jacked up the options, and then to the downside, that would be about 25 bucks. The 25 puts, though, are only 75 cents. So the call skew is outrageously higher than the put skew. But that doesn't mean if the stock goes down, the puts can make money, because even the 50 at the money puts, you're going to need about a $12.50 move just for those puts to be in the money. So, and then the vol's going to come out, right? So unlike most cases when a stock goes down, volatility goes up. When these stocks go down, chances are vol is going to come out. And if they don't go up a lot, for example, let's say GameStop's only up 10 bucks tomorrow, so that's 30%. The 60 calls are 10 bucks. I don't even think they'll move much. I think actually they'll probably gap down in value because the implied vol might come out. So it is very difficult to do, to trade the markets right now. I have been going into slow and steady stocks like Auto GM to the downside. I've been day trading, but I'm looking for the kind of the names where like the Procter Gambles, the Walmarts, the Dr. Peppers, those names to play to the downside, but also scaling down position size so much right now. You can see here, I have barely any risk on. You know, I lost money in Redfin. I tried buying puts. Oh, actually, now the puts are almost break even, but I sold them. And you can see just very small size. Like if you look at 540 bucks, 183 bucks, like literally no size for my account and stuff. So scale down position size if you want. If you want to be a degenerate dice roller, more power to you. Just know the options are pretty expensive. I've been doing the common stock itself, as I mentioned last week, in names like Laser and GameStop, just because the options market's a little crazy, and then obviously with all the halts and stuff like that, it's been a little bit wild. In terms of option paper, I know you're not seeing a lot, because why would any institution want to commit capital to this market? Right? Makes sense. But you are seeing some put buying and some of the, Coca-Cola, for example, food and beverage names. Not much flow in even names like NVIDIA. It's just not moving. There's no desire. There's no need for like a stock like NVIDIA or AMD right now. There's just, no market for it. You see obviously tons of GameStop because, since it's got real popular this week. A little bit of airliners. They've been very strong. Obviously high short interest in Save and American and JetBlue too. You saw some put buying in some utility companies like NE, double put buyer there. And then just more dice rolling, DOCN, SunPower, AMC, Big Lots. We actually saw some calls last week before it rallied 50+%. Troop, that's a pet insurance company, repeat calls. QS meme stock, SunPower meme stock, Lemonade meme stock, Rocket meme stock, Hood meme stock, GameStop meme stock, Roku meme stock, AMC meme stock, Troop meme stock, Afro meme stock, GameStop meme stock, NVIDIA real stock, Hood meme stock, Big meme stock. So you can see pretty much everything that's hit the scanner has been a meme stock, just about. So that's the market. Again, use proper risk management. At the end of the day, you do click your mouse. Yeah, it's not, the best market in terms of trade alerts, because quite frankly, everything's moving too fast and stuff. But stick tight, and see everyone, I think, Thursday.